Hey everybody, this is Jose Blasco. We are about to get started. This is a sound check. As always, I'd like to confirm that you hear me well. A quick message in the chat box would do. A quick hello. That would be the confirmation I need for me to know that you guys hear me. And I believe all should be fine. But again, always appreciated to have this quick hello message at the beginning of the session. In the meantime, I will turn on the video stream so I can also say a quick hello from here, from my corner. And that way I know we are ready to get started. Thank you, Christian, Joe. How are you guys? Very nice. Perfect. 5 seconds to go, and we begin. Here we go. Top of the hour. Welcome, everybody. November 11, 2021. This is Jose Blasco. This is Options with Options. I guess the title of the session says it all. We're going to be looking at the options markets and identifying opportunities and everything around options trading. Before we get started, as always, I would like to highlight our disclaimer on the upper left side of the screen. Please read it carefully. This is important information. Read it completely. Do not skip it. Read it well. It is indeed important, so please do that. Even if you are a regular attendee of our sessions, it's always important in case we were to change the disclaimer or do some minor modification. Anyway, agenda. We're going to look at the market. We will be reviewing the trades that are running at this moment in time. And from there, we look at new opportunities to be executed in the market, assuming we find opportunities that meet our rules, because we are disciplined, we are rule-based, we are mechanical, we apply our techniques with objectivity thanks to the use of trading technology. And of course, all of this needs to be impeccable in order for us to be able to look at ourselves in the mirror and not only feel but also know we are indeed approaching trading professionally. Even if you are trading a retail account or you trade your own money and you're not trading a fund, but all your actions needs to be the same as the pros. Okay, cool. So we're going to be discussing all of this in the session. A couple more things before we start. As always, in the sessions we use trading technology. In our website, there is an app section that you could visit. You can discover our apps. Our apps are basically supported in 4 different platforms: TradingView, MetaTrader, TradeStation, and the Traddictiv Options Planner, which is actually the platform I will use the most today, which is Top, T-O-P, Top. It's our options platform, even though it could be used for other purposes than options too, of course, options being the most complex asset. You could imagine the platform can be used for everything else. You have 2 versions of it. There is a questions and answers details on the page. I won't spend time today discussing this, but basically 2 versions of it, and you can also subscribe in a monthly or yearly basis, depending on your choices. With that said, I also want to point at the questions page. In this case, www.tradewithufos.com/Jose, which is the page that you want to use to post your questions. You come in here, you log in the website, and then you basically add a title, type your question, insert images, typically pictures of the charts, things like that, submit the question, then the question would show up in the bottom part, and you can get your answers, as well as helping building up kind of like a knowledge base for our community, as well as being able to take advantage of the questions already posted, which are very good. And you can just go ahead and search in the search box here, click search, and basically get answers to questions that you don't need to wait for the answer, because the answers are there already. Having said that, yesterday a few of you mentioned to me that you posted here, and unfortunately your questions did not show up. So we've been looking into it, and it seems that it is related to the fact that in the past few days, our website hosting provider was very badly attacked with multiple DDoS attacks. And it seems that there may have been some failure in some processes on the site, on the servers. And that may be the reason why, because we did some testing and everything seems to be normal. So if your questions were posted and were lost out there in the internet universe, so I guess it has to do with that technical issue. So please, I would like to ask you, for the ones of you that posted your questions, to please, and I'm sorry about that, but please repost them. And once you have posted them, please email me directly. Given the fact that there was an issue and it applied to you, I don't want this to happen again, and I'll be following up on this. So please shoot me an email after you post the question, and that way I will confirm all is good. So again, So sorry about that, guys, because I've been quite persistent on suggesting you guys using the page, and some of you went to use it for the first time, and next thing you know, it was not the smoothest experience. So sorry about that one more time. Anyway, with all of this said, let's jump in our platform top and let's begin our market analysis, and let's get ready for today. So I didn't say hi to Fernando. I hadn't had a chance to see your message. How are you, Fernando? Jeff, how are you, my friend? It's good to see you all. Same in the public channels out there, YouTube, Twitch, LinkedIn, Facebook, etc. Welcome everybody, guys, and let's begin. So S&P, hey, what did we say yesterday? Well, we say yesterday the market was very strong, and this is, statistically unsustainable, but it's happening. Well, it seems that the market is now taking a little bit of a breather with that one red dot. Statistics suggest that a down climate now would be 2 dots in a row. Notice the dot is thin, by the way, so it's an unconfirmed down climate, meaning that the strength of the climate to the downside is absolutely not impressive. So, we may not have continuation. Notice the difference between those dots that were thick and this tiny, tiny, thin red dot, which being red, it's telling you there is a directional component to the downside, but we don't have data evidence enough to suggest it will last. Okay, so it's an unconfirmed climate. If you were to trade one position at a time, the instruction you would be given is to not to trade. Of course, when we are building portfolios with options, we always have long, shorts, non-directional. So again, it doesn't mean we cannot trade, but definitely we don't know yet what is the clear direction for the market to move in, and therefore having too strong as a bet to either the upside or the downside is not a good idea. So while we had a change of color in the dot, we are basically in the same position we were yesterday when it comes to my comments, when it comes to looking for new opportunities, where I said, I'd love to find some longs, I'd like to find some shorts, ideally I'd find some non-directional trades as well. So interested in everything, so everything can kind of hedge everything while risk is under control until the climate defines itself more clearly, either red or blue, so then I can bet harder in that particular direction with less hedges against that direction. But right now, I would like to be properly hedged. Okay. Again, the lesson learned, to be honest, is that we've been commenting on how unexpected this very long duration for the climate was. Okay, that's a spectacular move to the upside. Really, it's amazing. And I remember the comments in the prior days, the prior week, yesterday, where again we were going to prepare positions to the upside or to the downside both. But at the same time, it did look like, especially when also you look at the weekly time frame, which is a blue climate. We got 4 weeks in a row on the weekly time frame. Statistics suggest on the weekly time frame it will continue for 7. Okay, so on the weekly time frame, it's suggesting it's going to continue. So on the daily time frame, given how strong the move is, how spectacular, the fact that we are out of whatever probabilities would suggest doesn't make any sense anymore, because it's so far away from whatever limits that you would not know what to expect. But notice this is the lesson. Notice how things in the marketplace can change so quickly. So next thing you know, yesterday when we were in the session, it looked like next thing you know we'd have a day where one more time we'd have another blue dot. Next thing you know, guess what? Now we have a red dot. Okay, and that was just because of the push that took place later in the second part of the session yesterday, when the market pushed relatively strong to the downside. It was it was not the end of the world, but it was a decent push to the downside. I think it dropped by 1 point something percent, something like that it was, I think. So anyway, so instructions for today, same as yesterday. Market analysis, to be honest, kind of the same as yesterday, because yes, we have a red dot, but it's unconfirmed. So, I'm not even, that positive that we're going to see 2 days in a row going down. Okay. And maybe yes. So we'll see and we'll react to it. Also, the calls, okay, seems to be, showing a little bit more power today than yesterday. Blue is call, gray is put. So you can see how there is 1267 to 12 is a little bit greater distance between the implied volatility for the calls real time and the implied volatility for the push real time. So there is a little bit of a directional bias to the upside, but there is no green UFO anywhere close. Okay, I mean, it's not like 459 is that far, but 459, if you look at the candle, the chart, the daily time frame is somewhere here. So in other words, we may have a push to the downside and get to see um, those two candles in the daily time frame going down, which would be a nice healthy breather for then the market to come back up, give us again blue indications, okay, ideally with more UFOs, ideally with the calls above the puts, and then next thing you know, we are now back in a healthy market condition. Right now, I guess we still need to be patient for 1 or 2 days, and I guess we'll know so much more, because it's either it's going to go back to blue and it's going to be confirmed and that's healthy, or it's going to go back to red, and then we'll have to let that red market expand a little more until it's back to blue, to reposition ourselves more heavily to the upside. But again, those green UFOs being a bit further down mean a lot, meaning that there is room for the market to fall, actually. From a volume map point of view, notice how even though the implied volatility for the calls as an average is greater than the puts, okay, the reality is that there are 1.4 times more puts traded than calls, 1.6 times more puts, 1.3 times more puts, 1.6 times more puts traded than calls. But notice how this is the average volume for the call for the put, and notice how no matter which expiration date, we are shy. There is not so much volume. We are within the limits of the volume. We have not surpassed the volume, like days like this one, for example, where there's big spike of volume for either the call or the put side. That's not happening. Okay, that's not happening. So if I was to have a guess, I would say this shows a little bit of momentum building up short term to the downside, that will probably bring in the market down to meet that 459 green UFO, and from there probably things will change. But again, this is just for fun to have a little bit of a guess, because when it comes to positioning myself in my portfolio, in my account, I'm just gonna, as I said a few times, I'm just gonna go for longs and shorts and non-directional. I need everything because there is not enough definition right now. Okay. From a VIX point of view, okay, we got a little bit of a big good news here. VIX went up a little bit. I mean, yesterday actually, in part of the session, we almost hit 20 on the VIX. Now, because the market cooled down today, so it dropped to, let's call it 18. Again, 18 is better than like 15 that we had, last week. So, for those non-directional trades, we may end up finding premium enough for those trades. Okay. So we will now begin the session when it comes to reviewing positions. So speed of the light, KBH, I'm not going to add anything. We talked about it yesterday. COF, to be honest, let me review the chart, but I believe there is not so much more to discuss. Also, I'm not sure if Maka is with us today. Maka, if you are here with us today, I'm curious to know if in the end you managed to get out of the Pfizer trade yesterday, if you were able to find a little bit of a better exit when the market was pushing down at the end of the day. I mean, it's not like that brought Pfizer too much more down, but hopefully you find a way to exit the trade, a little better than what we had during the session. So with COF, okay, if we look at the 3-day time frame, we can see how that stock keeps pushing higher. We are now dealing with 1.27% up. Okay, so the real-time P&L of this trade, if you did the conversion the way I did, is $122 per contract at this moment in time. And if you and remember, even though I have so many units here, really this trade is a bull call spread now, where I am long the 174 call, and then I'm short the 179 call. That's what that is. Okay, so this is a classical, if you wish, how do you call it? A bull call spread. Thank you very much for remembering such a basic option strategy. So yesterday, some of you did this conversion. You did it at a better price than me. Therefore, your net P&L should be better. But anyway, that's mine, and that's what I have. And 179 is the option that we sold. If you look at the chart, we have multiple UFOs there. Okay, so we own 174, which is more or less here, and we sold 179, which is above. Okay, so we may not get there. So I feel it's just a bit too close at this moment in time, so I won't do it. But as this market rallies and gets closer to that red UFO, a good idea, and I will just say it so you guys can do your homework and try it and see what happens, and we'll talk about it next week. Feel free to remind me if I was to forget. But basically, at this moment in time, we are dealing with the 179.4 call short and the 174.4 call long. Okay, so as the market rallies, okay, one thing you could do is to go ahead and butterfly it by then selling another 179.4 call and then buying above the 184.4 call. Sorry, that would be buy 184.4 call. That would now convert your bull call spread into a directional call butterfly. Well, remember, I mean, you guys tell me, in a scenario like that, if we butterfly it, here's the hint, the risk profile will look like a triangle. So question for everybody, what would be the ideal exit price for this trade? What would be the ideal exit price for this trade? Okay, you guys tell me. Let me see. Ahmed, how are you, my friend? Joe, the heavy volume of puts at 460 is a hedge or a target? We don't know. We don't know. We just know there is plenty of volume, and volume means they are being, puts are traded, meaning that for every buyer you have a seller. So we don't know. The hint is that the implied volatility for the calls is higher. So then the assumption would be puts are being sold. Okay, and if puts are being sold, so that's bullish. Okay, so people are expecting a breakout out of that level. That would be the assumption, but we don't know for sure. I mean, that would be amazing. Top of the triangle, very good, which is 179.4. You said it perfectly, guys. I love it. Very nice. Perfect. Okay, so this, again, homework for you guys to explore if converting the bull call spread into a directional butterfly is something that is worth it to do. You will need to simulate it to do that. Okay, I'll do that next week because probably it's much better as long as the stock rallies more. Then it's going to be so much better. Cool. Okay. One last thing about COF. If we go back to COF and we look at the expiration date, remember it's January 22nd. 2022. So in other words, this is not a trade where we are dealing with November expiration, something like that. So we got time. Okay, so that's why I'm not going to jump into doing it today, and I would rather have this thing rally a bit more before doing that. Cool. Okay. So let's look for trades. Okay, let's look for trades. So we're going to be looking at the matrix, and I'm going to start looking at bullish trades. So the initial part of my filtering would be to look for top positive CIV spread. Okay, that would be the first thing I want to find is directional bias built in the options prices themselves. Then, of course, I would love the options to be very cheap, but I will leave that for later. For now, I will leave it as known. We're looking at stocks with $34 minimum, 300 shares, 300,000 shares minimum volume. All of this is all the same. When it comes to filtering for stocks, we're going to be looking for stocks that belong to strong up long-term groups or industries. I should say sectors. We're going to be looking at the scan list, which is the one I use all the time, the penny increment options list. You don't need to use this one, but I guess it's quite convenient. From a strength point of view, everything is unchecked. Okay, so we are not going to use that. From an earnings point of view, we want to give ourselves some time, so exclude everything that report earnings in less than 3 days. So we don't need to exit the trade before reaching the target just because earnings is tomorrow. And then nothing about the ranges. And then from an auto climate point of view, in a perfect world, you will want the climate on the daily time frame to be up and sensible and be near the 9 EMA. And on the weekly time frame, you will want it to be up and early. That would be beautiful. Of course, all of this is a lot of demand, so I may get no results. When I scan, let's see, and I got nothing. So let's start on checking to see what's the best we can find without being that perfectionist. Okay, so if I uncheck near the 9 EMA, so I don't got that. If instead of early on the weekly, I look at sensible on the weekly and sensible on the daily, what do we got? Nothing. Okay, so that probably means that course, with such a rally on the S&P, that probably you would have hopeful climates. And now, if we search for hopeful, we start getting some symbols. But of course, we don't want to trade hopeful. It's not a good idea at all. Is that making sense? It's not a good idea at all. Okay, so something that we can do then is to give the trade a little bit more of a breather, and instead of relying on a daily time frame, we can try the same setup, but now we're gonna go for sensible on a 2-day time frame combined with the weekly, and see if we get anything, and we get BA. Okay, so BA. So Boeing, so let's begin analyzing this guy, okay? And by the way, when it comes to, we have very, very few symbols. This is the consequence of the S&P just rallying like crazy, so everything is very extended to the upside. Most of the stocks are very extended to the upside, especially if they belong to strong sectors, which is what we're looking for. So, so I only have one choice at this moment, so I'm not sure the options are gonna be cheap, but let's check. So are they under the 20%? No. Are they low relative to the historic volatility? So below 2 standard deviations? No. Are they low from the point of view of having suffered, in this case, enjoy the best decrease, the greatest percent decrease of implied volatility, continuous implied volatility mean in the last 5 days? No. So in other words, the options on BA are not cheap. Okay, the options on BA, and now we got BX as well. The options on BA and BX are not cheap. Okay, is that a problem? Well, it's not ideal, but we're gonna fix it by doing directional butterflies, because the problem of getting into an options trade where the options are expensive, they are overpriced. The problem of that is that if the implied volatility of those options goes down, then you're going to lose premium, you're going to lose value, you're going to lose P&L in your account. Even if the stock is moving in your favor, you may actually lose some money because the value of the options are shrinking, because when you purchase them, the options contracts themselves were overpriced. So how can we overcome that? And in other words, the word I'm thinking is Vega, right? Vega is going to kill me if volatility drops, because I'm going to lose value at the rate of Vega. And if they are expensive, so that's going to hurt me, right? So how can I manage and offset that problem? Well, I want a Vega as close to zero as possible. And if my Vega is very close to zero, so then that's not going to be a problem, in the sense that, even though the options may lose value by themselves, I will have multiple units of short units that will actually pay me for the decrease of value of the options I purchased. And that, my friends, is accomplished by doing a butterfly, okay, a directional butterfly, which is buy a call, sell 2 calls, buy a call, okay? And I'm just going to explain that as we build it, okay? So we have 2 choices, okay, that both seem to be cases where options are not cheap, and therefore we're going to have to butterfly them to be able to be directional with those trades, assuming all the technicals give us the green light, but also from an options point of view, we want to neutralize that Vega exposure, okay? So getting there in just a moment. Fernando, Jose, will we have the ability to pre-configure scans in top and call them by name? No, we won't be able to do that, Fernando, because the scans that are running on top, they run on the server side. That's why they are so fast and so powerful. And therefore, because they run on the server side, this is something that it's on the cloud. It's not something that you guys have access to. It's not like the scans on TradeStation, where all the processing is running on your computer, which is basically so slow because of that reason. But then it has the beauty to do what you are suggesting to do, Fernando. You can save it. So the answer is no. Having said that, you can do some combinations, because you can get symbols or scan from top, export them, save the results to a list, and then plug that into TradeStation and scan it again, or vice versa. Scan it on TradeStation with whatever additional extra parameters that you're looking for, get the list from TradeStation, and then insert the list as a scan list in top, and basically use the scanning capabilities of both platforms. Now you get the best of both worlds, if you wish. But in our case, when we give priority to what we wanted to do, we give priority to speed of execution, efficiency, things like that, instead of being able to customize, every single aspect of it, because when you put that on the cloud, then of course it's very difficult. Okay, now there are all sorts of issues that take place. Okay, putting on the side that you guys would need to be programmers, and then even with that, then we have a series of security issues where what if someone gets into the server and now can access another client account and things like that. So it's complex. Okay, but I'll stop there and come back to the trade. Okay, thank you for the question, Fernando, and also I see your response there. Thanks for that. So anyway, so let's go for BA. Okay, so we're gonna see if BA is a valid choice for us. Remember on the daily time frame, that's a hopeful climate. So I'm gonna quickly switch to the 2-day time frame. So I'm gonna get my healthy climate here, where the climate is showing 2 out of 4. Of course, in that scenario, I love to see implied volatility of the calls greater than the puts. That's ideal. In this case, they are equal. So I don't have a major edge as an average in the last 3 days. Okay, but at least thanks to the scanner, I know that at least today, implied volatility for the calls. Okay, if I was to change this from 3 average to real time, then I know I'm not going to do it to save time, but I know the blue line is above the gray line. Okay, because the matrix told me. So there is a directional component in my favor. The climate is supporting me. The stock belongs to a strong industry, all of that. And we are fairly close to the EMA, which is located at 217, almost 218. That's the EMA. And therefore, we're going to be looking at UFOs and see if that gave us some valid entry. Okay, so the first UFO we can find here on the 55-minute time frame that does provide 50% or more probability, it's the 215. Okay, and the 215 it's below 217, so that one is not enveloping the EMA, so that one would not be a valid UFO. Okay, so let's continue with our research. What if we move to the 89-minute time frame? So if we move to the 89-minute time frame and it's loading, well, now we have 38%, and that is not good enough for us to accept. So we're going to move to 144. The 144 has a UFO down there at 214, so that's not good either. It's not enveloping 217. What if we go to 233? So 233 provides 1, 2, 3. Here we go. A UFO at 214, no good. What if we look at the 377? No good. The UFO is at 207, so that's no good. Okay, so from an intraday point of view, we are not finding UFOs in the right place. We find good UFOs with good probability, but we don't find them in the right place. Okay, so let's take a look at the daily time frame to see what we have. We have 51% probability on the daily time frame, and the UFO is also located at 214, which is not 217, so no good. What about the 2-day time frame? No UFO. What about the 3-day time frame? 3-day time frame as well. We have a UFO at 215, so it looks like a very, very relevant price point, that 215 UFO, and it may very well work amazingly well, but it's not meeting our rules if you are using the rules of the EMA and everything else. So yeah, so in this sense, we're gonna have to pass on BA, and therefore we're gonna move to BX, which was the next one. You can see how, if we were here just a little earlier in the day, maybe we caught this trade that went to the EMA and bounced already. Let me see. Wait a minute. Here the climate is 10 out of 8, so this is actually hopeful. Did I use the right symbol here? Yeah, BX 2-day confirm. So maybe there's been a little mini glitch there. 10 out of 8. Yeah, so this is not correct. This is not correct. We got an error which is not correct. Yes, so little issue there. That error is not correct. Okay, so look, we try to find a setup with, and again, since the market has been going higher and we are looking at strong sectors, most of those stocks, they had beautiful, price traveling movements to the upside. So many of those stocks are just as hopeful or late as the S&P was yesterday. So finding sensible setups it's tough. So that's why I went from daily to today, and we almost found it, but we didn't. So then I'm going to give this trade the last chance, okay? Using that type of setup, looking at 3-day, confirm, sensible, combined with a weekly, confirm, sensible. And I'm just going to scan again. And now I am being given Mondelez, which I'm going to pass on this one because I know that that one is very challenging for liquidity with options, okay? So tough one, okay? To find a long, utilizing our methodology with the climate and the UFOs, since the market has been rallying nonstop. So, most of those trades are giving us hopeful setups. Can you get into a hopeful setup? Well, I'm not a fan, okay? I mean, would you have made money if you got into hopeful trades as the S&P was just expanding? Yes, you would, but you would this time. Most of the times, you wouldn't, because that's what probability suggests. Is that making sense? So I'm not a fan of getting into hopeful climates. I indeed make it a rule to be sensible. Okay, and maybe some of you are a bit more flexible than me, or you have a rule that says, look, if it's hopeful, I'll still take the trade, but I'll do it with half of the size. There are many combinations that are possible. It's all about your trading plan in the end. Just to keep it simple, and just because that's me, I won't. Okay, that's it. So then what can you do? Okay, so if from a climate point of view you are looking for a long and we didn't find it, so what's the other possibility for us to find a trade? Where the other possibility for us to find a trade to go long is number one, do the same thing that we did with COF, which is instead of looking for stocks that are in an up climate, okay, look for stocks that still belong to a strong industry, in this case, long, okay? And from a climate point of view, to look at stocks that are in a daily climate, okay, which is confirmed down and late, meaning that those market has been crushed, okay, and on top of that, we combine it with the reversal signals, looking at the speed bumps of support, like we did with Pfizer, like what we did with COF, which have been working well. So we're gonna do that and scan and see what is it that we're gonna find. Okay, and again, in this case, we don't find anything, and the reason again is the same reason. The reason is the market has been too strong, too bullish for too long. So nothing that belongs to those strong sectors or groups, nothing has been crashing so much to a point where it's late. So what about hopeful? Do we have anything hopeful? One, ATVI. Okay, so let's take a look if the setup is good. That's the only one we have. Because it's hopeful instead of late, I'm going to be just a bit more careful. If the technicals allow me to, you will see I will look for UFOs below price, okay, just to give myself more room to allow for myself to be wrong by a larger amount and not to get in trouble. So you will see that as I explain it. But first, let's look at the technicals to see if, let me get into daily or beyond time frame. Okay, so here, this is a 3-day time frame. So for example, if we look at the last obvious turning point here, I guess it's clear. So we are in that speed bump. Okay, and this is what the matrix identified for us. Now, the issue is that while we are in a speed bump, there is no green UFOs on the 3-day time frame. If we look at the 2-day time frame, well, you know what? Yes, there is a green UFO right here, okay, which is a 57% probability UFO. And if this market turns and goes back up, there is so much room for this to rally from 60 something all the way to 77. So it's actually quite impressive. If we were to get into this trade and we were to surpass this pivot high, we would expect it to rally all the way to 69. So that should be a fairly achievable target. And if it passes that target, the red UFO is very far away. So don't get confused here, okay? Because I'm going to be using two charts, okay? Even though while I'm going to be using two charts, I'm very likely going to say no to this trade. But the two charts I'm using here is, number one, the 3-day time frame shows very clearly how I am in a speed bump. If I go to the 2-day time frame, it shows very clearly we are in a green UFO. Okay, so that's beautiful. but yeah, but I'm not gonna take the trade because remember when a minute ago I said when I was looking at the matrix that if this was a late climate, okay, then I would assume that the move to the downside is very badly exhausted, is in the speed bump, is in the UFO. Those are pretty powerful forces to push it back up. And because it's exhausted, it's likely going to happen. But because it's hopeful but not late, so then it's fair to say that it's tired for fall. When it comes to falling, it's tired of falling, but it's not that exhausted. So it may fall more. So the setup I'm looking for would be not to rely on that UFO. The setup I'm looking for would be to rely on another potential UFO located below somewhere, whatever. Okay, I need another UFO below. That's the bottom line. Okay. Wait a minute. Wait a minute. Sorry, guys. This is the 55-minute time frame. This is not the 2-day time frame. Let me do this again. Okay, sorry. Okay, so no, there is no green UFO though. Okay, so I made a mistake with the time frames. So the 3-day again. Let me re-clarify so I don't drive you crazy, which I may have. The 3-day time frame shows very clearly why we are in the speed bump. The 2-day time frame, okay, shows very clearly there is no UFO around, and the daily time frame shows there is a UFO below, but nothing below UFO. And again, I would like to be able to rely on 2 UFOs to do this because the climate is hopeful instead of late. Okay. Am I still using the 2-day climate, Mark? No, I was using daily. Okay, I was using daily. I was back to daily. Okay, I was back to daily here. Okay, so here I did not make a mistake. I made a mistake with the time frame on the chart, but with the matrix, I did click on the right place. Okay, so yeah, so no trade. Okay, so what else can I do then? Okay, because this is something that will happen from time to time. Even though we have many tools to be able to find trades, there are times where as a consequence of the S&P expanding so much, it's going to be tough to find those stocks, especially if you want them to be on the right grouping, okay, which is relevant. I think this has been a very powerful lesson for everybody, that getting long in stocks that belong to strong groups and getting short using stocks that belong to weak groups makes a big difference, both if the stock goes your way or if the stock goes against you, in both cases. So ignoring the grouping, because an easy solution would be, okay, go back to the matrix and uncheck the stock filters and whatever group, take the stocks. But then remember, stocks are fragile. So if you only rely on the stock itself, stocks are very small compared to the whole size of the S&P. So I wouldn't do that. Therefore, I am happy to get original, if that's a valid way for me to say it, because it's all rule-based. There is nothing original here. But if that's okay for you to understand what I'm saying, so I am happy to be original or creative when it comes to finding different types of setups. But there are certain rules that, if not met, then I'm just going to discard the trade. For example, no UFOs, no trade. Okay? The grouping is not in my favor, no trade when you are directional. Because, all of those elements are very powerful. Okay? The climate between hopeful to late, does it make a difference? Yes, it does. But it doesn't make as big as a difference as no UFOs or no grouping. Okay? So there are certain things where it's going to be non-negotiable, where there are other things where it's okay to be a bit more creative, as long as you do it in the context of a series of rules that allow you for that flexibility, instead of you are indeed improvising just because you are desperate to find a trade and you're just making it up. Okay, so don't do that. Make sure you have a structure in place, and these sessions hopefully are helping you to understand various choices that make sense, so you can write it down and have rules in your plan. Now, something I haven't done, which I'm going to do it after, in case my next step fails when it comes to finding a trade, is that the one thing I haven't done yet is experience with the intermediate trend strength. I'm working on the long term, okay? This is always my beginning. Why? Because if I get into a trade and it goes against me, but that stock belongs to a group which long term is strong or weak, so then it may take longer or less long for the stock to come back to me, but at least, it's not like I'm relying on something that if it fails, it means the intermediate trend has changed. So I'm relying on something that, because it's long term, is likely going to last more. So if the stock fails and goes against me, I can still work on tweaking the opportunity, like butterflying it, doing all those things that we do to reduce the risk and give the trade a second chance. And if in the end, that long-term trend, which is supposed to last because it's long-term, ends up kicking, like it happened with COF, like it happened with Pfizer, etc. It did not happen with the prior trade. What was that? I think it was Merck. Was it Merck? I forgot. So, but in the end, you are giving yourself more time for, in the end, that stock to come to you, right? So I prefer to start with the long term. But if that doesn't work, I'm okay. I'm flexible there to use intermediate term trend strength, even though I know that in those trades, if it's not happening quickly in my favor, probably it means that that particular strength is changing direction in that intermediate time frame. So that's why I prefer long term. Okay, so I'm giving you those details. So again, you can set up rules around that for yourself in your trading plans, depending on what you're trying to accomplish in your trades. Okay, so but before I'm going to tweak that, there is one last chance I'm going to give to this trade. Okay, so which is not related to climate. Okay, so I'm just going to uncheck climate, so no climate filtering. Okay, no pivots either. I'm just going to go back to the first scan I had, which is positive CIV spread. Okay, so I'm back to positive CIV spread. Nothing on the climate. Okay, notice that this is giving me a relatively short list of stocks. Okay, so that's why in the end I didn't find trades either with the climate or anything else, because the raw list of stocks that made my positive CIV spread is very minor. But I don't want to miss on that one. Okay, this one is another one which is important. Okay, because this is what's happening from behind the scenes that we don't see on the candles. And so then my other choice will be to turn on the Elliott wave turning points in a daily time frame. Okay, so I'm going to change this to daily. Okay, so we're going to see those Elliott wave turning points in the daily time frame. In a daily time frame to the upside, because we selected a strong up grouping. So I want the Elliott wave turning points to the upside. I'm going to select within the last 5 bars. Okay, even though less is better, but that way we give ourselves a few more chances, and then we can analyze the charts. And then I got multiple choices, okay, and the ones that would normally work the best are the 3 on the top: long term, medium term, short term. Ultra short and dynamic typically are the ones that give more fake signals or create moves that are reliable, but where the target is very close, and therefore you don't end up with very good relationships between risk and reward. So I'm going to start with the long term, okay, and see if any opportunity is in place. And we have one with Yelp. So let's take a look and see what's going on with Yelp. First, I'll look at the technicals, then later I'll look at the options prices. Okay, so here's what we have with Yelp. Okay, and based on what we have with Yelp, to be honest, it's looking beautiful. We have an Elliott wave turning point. Target 1 is all the way here. Target 2 is all the way there, 44. Okay, so from that point of view, it's nice. Okay, the climate is against. Okay, so that's not very good. Okay, that's not very good. But again, if you're gonna rely on Elliott wave, I would suggest to add the auto climate as an additional filtering tool, because then you are basically asking too much, right? So if the Elliott wave turning point becomes a reality, a few candles later, you will see the climate change. So if you want the Elliott wave turning point indication to show on the chart and to have the climate already changed, this may happen, but this is what would this imply in most cases. This would imply that this candle already went all the way here, so the climate is already changed and is strong, and that means that at least one of the targets is already met. So you have the beauty of more confirmation, but you have the problem of less profit margin. So let's not be that much perfectionist. While I am very perfectionist, there are certain things where I'm okay to be flexible, and in this case, to me, it's either you rely on Mr. Elliott wave or you rely on Mr. Auto climate, instead of trying to put the two together and have them be perfectly in sync because it basically you are asking a bit too much. Okay, it will happen, but only a few times a year. So, I would suggest not to do that. If you think about the philosophy of what you have learned in our courses, right? So, what AutoClimate does is AutoClimate tells you, is it time to trade, yes or no? And if so, are you supposed to be a seller or are you supposed to be a buyer? That's what AutoClimate does. When you have an answer to this question, then question 2 is, okay, so what's my entry, what's my exit? And that's when the UFOs come into place. That's when the EMA comes into place. That's when the speed bumps for targets come into place. So that's the second part of the question. But the first part is it time to trade, yes or no? And if so, long or short? That's the answer that AutoClimate gives you. Now, this is also the question that Elliott wave gives you. If you have an Elliott wave turning point to the upside, that's telling you time to be a buyer. So then the next question is, I'm gonna, let's find the entry and the exit, okay? Which is what I'm about to do. Cool. So we found Mr. Yelp. The next question I was going to check before I look at the chart a bit deeper is, are those options cheap or expensive? So are they under 20? Yes. So Yelp has cheap options. Options are underpriced, and therefore we're going to be able to do just basic bull call spreads. We don't need to butterfly it, which is a better starting point, because then as the stock starts moving, you can then butterfly it, like I have suggested for COF at the beginning of today's session. So indeed, so far, I'm happy to see what I see. So Yelp belongs to a strong industry, is giving us a long-term turning point for Elliott wave. The target is around 44 overall. So now let's find out if we find UFOs. We'll start with the intraday timeframes. Are we meeting any green UFO at this moment in time? Not yet. On the 55-minute time frame, we don't have any. Do we have any UFO on the 89-minute time frame? We have one right here, and the probability is 57%. Okay, so let's say that stock drops to this level of 38.32. Okay, so if I draw it here on the daily time frame, which is where we have the Elliott wave indication, so 38.32 is just a bit lower than where the current price is more or less here. Okay, so this is 38.32. So if you're gonna enter here and you're gonna take profits around this price point, that's a pretty nice trade. Okay, now are we gonna get all the way there, right? Is it maybe too demanding? Is it reasonable? So again, like I've done many times in prior sessions, you can use your pivots, and wherever you have a pivot, you can then project with a speed bump where is price likely going to turn if it goes above this pivot, and notice how reaching that 44 is indeed doable, but that would mean that you would be reaching that 44 as the latest portion of that speed bump, which to be honest is a bit less likely. So I'm going to be just a bit conservative and shoot for a target of 42.78, something like that. This is probably going to be a better trade. Okay, and if you think about it, 42 point something entering at 38 point something, that's like a $4 move on a $38 stock. That's not bad. Okay, it's a pretty okay move. Okay, and this could indeed happen. The S&P is now resting with a red dot. Let's say it rests another day or even 2 more days, and then goes back to blue, and then that's a strong sector, and all of it pushes up, and Yelp is just gonna rack it up and could certainly reach the target relatively soon. Okay, notice how when that stock pushes up. Look at the size of this candle. Look at the size of this candle. Look at the size of that candle. Look at the size of that candle. So all those candles are there for a reason. It's because that stock belongs to a strong industry. So we may have that happen, even though so far it's really sideways, but we may have a breakout of this range, okay, and reach that target almost located at 43. Fernando, yes, Fernando got it. First, we try with the aliens, then with the earthy. Love it, love it, love it. Yes, indeed. I remember when, I have this tendency sometimes, you guys know me well, that sometimes my jokes are better than other times. Sometimes my jokes are quite bad, to be honest. So I guess it's okay for me to acknowledge that. And I remember when we started with our UFOs, back in the day, I remember that, in some of the training sessions, one of the kind of like quote I used to use to emphasize on the importance of trading emotions and so on was to say that you should not trade like a human, you should trade like an alien, meaning that we should not fall into the trap of human emotions, right? And yeah, I think it was the very wrong way on how to say it, but at the same time, I think it makes a lot of sense. So, what you just said there, Fernando, does resonate with me, and you just put a smile on my face. So anyway, that stock it's currently trading at 38.53. Okay, so we are looking at a target located around 42.76, something like that. So let me go ahead. Okay, I'm gonna do it here. So 42.76. I'm just gonna put my mouse right here, 42.75, good enough, and I'm gonna send this to the strategy builder with a target of 42.75. So just so I can calculate my time to target, which is 12.17. Okay, 12.17. Okay, and we can get complex at planning the trade, but I'm gonna give you two versions of the trade. So version number one, let's go with what the strategy builder provides for us. Okay, so I'm gonna hide losers, update, and I'm gonna sort based on return on investment. And it seems that one of the best trades to take would be a bull call spread using January 21st, using the 42 and the 47 call. This would be one of the best trades where if you were to reach your target, you would have made 105% return. This trade would have a risk of $85, meaning that the debit needed to this trade is $85. So that means the most you can lose is 85. And if you get to the target, you will make $94. So it's 111% return on investment. So this is indeed, if you want to take a screenshot, this is a valid trade. This is, all good. But beyond the strategy builder, so what I would like to do is to also use the spread select, because with the spread select, often we can take advantage, a little bit of a more advanced type of advantage when it comes to taking advantage of price anomalies that are sometimes found in certain strikes or certain expiration dates. So what I care about is the fact that we're going to use December 17 is my target date. What I'm going to do is I'm going to bring in the spread builder, spread select. I'm going to float it. I'm going to maximize it. Okay. I'm going to select my target to be 42.75. I'm going to update the target date to be 12.17. That's what we said, right? Target date 12.17. Here we go. Okay, 42.75. So I got that. Okay, 42.75. 12.17 is the target. Okay. We're going to be building a bull call spread. That's what I'm going to analyze. And instead of just leaving it there, what I want to check too, okay, I also want to check when is the earnings date for Yelp, which is set up to happen in February 8. Okay, February 8. So notice how the strategy builder is not looking at that. It's just giving you January 21st, which is a very smart expiration date to use as well. I mean, it generates 100% return on investment, so why not? But I'm going to try to outsmart it a little bit, trying to find price anomalies and also using the expiration date that lines up with earnings to offset the problem of time decay in case this trade was not to start working my way immediately. And then we need to wait until that stock potentially recovers thanks to belonging to a strong sector. So September 8th is the value I want to keep in my mind. And when I look at the spread select and I look at the various expiration dates available, we got February 18. Did I say September? February 8th. That's what I meant to say. And the one expiration date that does exist, it's not February 8th, it's February 18. So that's the nearest, and therefore that's the one I'm going to use. Instead of January 21st, I will use February 18 in this case. Now, with that in mind, I'm going to be looking at ranges starting from, the current price is 38, the target is 42, so we have like $4 of distance. So I'm going to start with minimum 4, but 4 is probably not going to be good enough to give me positive gammas. So I'm going to go all the way to 20, whatever. I mean, the computer will do the work, so I can just widen this very wide. So many other strikes are going to be into consideration in this analysis. And I'm going to be looking up and down, number of strikes. I'm going to change that to 99 in a moment. I want to show, not hide. I want to show the P&L at the target date and the P&L on the expiration. I want to show all the various results because I'm being directional here. So I want to find out what if I reach my target on time, what if I don't reach my target on time. And with that, I'm going to now activate the filter with the template for the bull call spread. And with all of these, as you can read here, bull call spread preferred parameters. So now I'm going to build 99 of those spreads and sort and see if I get passes or all is failed. So far, all is failed. Okay. So why is that? Okay. Why is that? Well, the first thing that catches my attention is that there are many of volume 0000 with no quotes on the last, meaning that some of those strikes, even though February 18 is a monthly expiration date, some of those strikes are not that liquid. Okay. The difference between the bid and the ask is not too bad, but there are many strikes that are not being traded. So we have missing quotes because of that reason. So I'm not delighted to see that. And because that's the case, then I only have one choice, which is to be a bit more relaxed with my demands that I have here on the screen. So what I have applied to the long legs and the short legs, I'm going to leave it the same. But then when it comes to risk and reward, I'm going to uncheck it. Okay. And when it comes to the net spread, the gammas and the vegas, I'm going to uncheck them too. I'll come back to this later to see if I can make it better. But at least I want to get some pass instead of having everything fail. Okay. So now I have few passes. If I get a bit more relaxed, and to be honest, I could go back to working on my filter, but if you look carefully, I got a few passes, but even though those pass, the P&Ls are negative, so I don't care about that. So basically, the ones that makes the most sense to me are the ones that we have here on top, okay? And those are the ones I'm going to explore. So I'm going to zoom in and basically have a decision right now to see which is the trade that we're going to take, okay? So now, let's say you take the trade number one, okay, and you reach your target on time. That trade is going to make you 1.95%. Let's say you take your trade number two and you reach your target on time. That trade is going to make you 14%. Now, trade number one has an improvement if you reach the target on expiration. Okay, if you reach the target on expiration, you have an improvement in the sense that you would make more the longer it takes for you to get to your target. Okay, so that's good in case the stock is going to move slow. But again, I personally don't like that. I prefer to expect the stock will reach my target on time because if the beginning of my expectation is that I'm going to be wrong, so well, first of all, it's not very positive. But second, if I'm going to be wrong and the stock goes against me, I'm just going to butterfly it. I'm going to work on it. I'm going to do all sorts of tweaks, isn't it? So then, who cares about the return on investment at expiration if I'm wrong, because I will not have that position at the end. So I prefer to look for better performance when we reach the target on time, but then see that there is a very limited amount of drop in performance if we were to reach the target late. So like, for example, if I got 14%, if I'm right, and then if I reach my target late on expiration, then I only make 1%. So that means that time decay is truly killing me all the way, big time. So the fact that we go from 14 to 12% means that the problem that time decay provides to this trade is basically like, that difference in percentage, which is, like 2%. So it's nothing. Okay. So that I like. Okay. That I like it. Now the one thing I don't like is the fact that the cost of this trade is 310. Okay. And I'm only going to make $44. So if you think about the other trade that we found, the other trade had more performance. Okay, so I want to have a final comment in a moment to tell you which one I prefer. It's going to be this one here, and you'll see why. You'll see why in a moment. But I want to take a look at the Greeks as well. So the Greeks are 35 delta, gamma stars neutral, vega is fairly neutral as well. So to be honest, it's pretty okay. It's pretty okay. Liquidity 460 to 570, that was not too brilliant, but 190 to 210 is pretty okay. So with patience, you could negotiate your entry price somewhere in the middle, and if you get filled somewhere in the middle, it's fine. So we are basically struggling with the quantity of passes. I had to change the filter, and the reason why is because Yelp is not the most liquid option chain in the world. But again, if you negotiate your entry properly, it could be okay. Okay, you just need to be very patient and try to get the midpoint. Okay, so we're gonna work on that patience. Okay, and because of that, I'm just gonna place an order now, because I will probably not get filled now at the midpoint. But if the stock drops a bit, then I will. And by the way, if the stock drops a bit, that's when you'll be hitting that green UFO at 38.32, right? So I'm happy to place my order now, waiting for this to happen a bit later in the day or something like that. Now, why I am not going to be keen on this trade, even though it shows so much more performance? Well, because while this trade is perfectly planned and is perfectly valid, meaning if you're right, you make that, and if you're wrong, then you lose the cost of the trade, which was, $80 something we saw before. So this trade is totally fine. The problem is that this option, in order to get a performance, happens to be using strikes starting at 42 to 47, which is above the current price, meaning those strikes are all out of the money. And because they're all out of the money, the problem is that when it comes to tweaking choices, in case the stock goes against me, I would be very limited on how many tweaks I can do. In the spread select, one of my conditions is that the long legs are inside the ideal strike zone, which hopefully you guys remember what it is, because if you don't, I don't have time to explain it now because we just reached the top of the hour, but you can watch the recordings from the top sessions on the Sundays because it was explained there. But basically, if I'm using the long legs to be in the ideal strike zone, I am making sure those options have a greater probability of breaking even or better on expiration. And in that sense, I'm going to have so many more choices for tweaking in case that stock goes against me, and I can then do more things with those options. So of course, the price to pay is that the starting performance is going to be lesser. Okay. And now, as you can see, as those prices, the bid and the ask varies because the spread is a bit wide. So that has an impact on that percentage, which went to 7% now instead of 14. So you may see those values to be, low, but the reality is that this trade is likely going to perform better, especially if you negotiate your entry and exit prices. And also, being a trade that has the ideal strike zone feature in its favor allows for more efficiency in the tweaking in case the stock was to move against us. So this is a better way to enter the trade if you want to manage it. If you want to just do the trade, leave it alone, and if you're right, you make that, and if you're wrong, you lose $80 something. So then go with the strategy builder, which is a way simpler way on how to trade options for people that are less experts and still have valid trades, even though you don't have too many options to give the trade a second chance, because you wouldn't know either if you are not an options expert. But if you are more advanced, like I believe most of you are, or are in the process too, or are interested too, and that's why you're watching this live, so then this trade, it's more powerful, even though the values, are not impressive at this moment in time, okay? So we're gonna go with that one. I'm gonna go for the risk graph. This is a trade where we're gonna buy the 35 call and sell the 43, okay? This is what we're gonna do. What about doing both? I wouldn't have clear reason why not, but it feels weird to me, and maybe it's just because of how my trading plan is set up, where to me I just do one trade at a time, meaning I do multiple trades at a time in my account, but it's kind of like for every instrument, I have one type of positioning and I have reasons for that or rules around it. So then it wouldn't make sense for me to do both at a time, but at the same time, why not? They're both valid from the sense of if you catch the move, you're gonna make money. Okay, so yeah. One is to throw away, one to tweak. Yeah, you could do that, but again, tweaking implies management and time in front of the screen. So if you're gonna have two, then you need to manage two, even though one is just to leave it alone and the other one is to manage, but you still need to watch the one that you leave alone. So again, to me, it doesn't make too much sense, Christian, even though there is common sense on your approach and your proposal and your idea. It does make sense. If you do it, it's not wrong. But again, at least it doesn't resonate with my trading plan or my way, my philosophy on how to approach each particular symbol, okay, each particular ticker symbol. So anyway, so let's go ahead and place this order, okay? And again, I'm gonna place the order now, even though we need the stock to drop a little bit. I'm just gonna enter now because I want to negotiate the spread, very, in a very efficient manner, the most efficient I can. So let's go ahead and take a look, okay? So Thinkorswim, we're gonna look at Yelp. Yeah. These are great conversations, and Christian, please keep posting those suggestions. Everybody, keep posting those suggestions. Everybody, keep thinking. Okay, I love what you said there, Christian. That's how you learn, because with options you can do so many things, and certain things are more efficient than others. Certain things, may create an advantage or may create a disadvantage. So ask, my friends. Okay, this is, this is what you should be doing, and I'm very, very happy when you do. So we are doing a vertical spread, buying and selling calls that expire in 18th of February 2022 for Yelp. The strikes to be used in this trade is buy the 35, sell the 43. So we buy the 35 and sell the 43. This is a trade that will cost us around 355. The midpoint here is 345. So the most you will lose on this trade is 345 if wrong. So I'm going to go for that one. And I'm going to try to get 345. And I'll try to get that. If I'm just going to place the order and see what happens. And if I don't get filled, so then later, I may change it, because again, as you know, I've done it many times, even though it puts me as a disadvantage. I just need to have those trades in the account, so then I can help you understand with everything that's coming after being filled. So even if I'm going to get a bad price, I'm still going to do it. In your case, don't accept a bad price, my friends. Just make sure you have the right prices. Make sure you try to shave those spreads efficiently, especially when you see an option chain where, the bid and the ask just got better. A moment ago, it was not as good. 520 to 570 is better than before. 190 to 210 is better. It's better than before. So the spread now goes from 330 to 360. It's better than before. But maybe the day it's time for you to close the trade and exit. The spreads are not so good, isn't it? So again, Yelp is not the most liquid, option. Notice how the 43 call had 0 trades today, and the 35 got only 1 contract. Okay, so again, it's limited liquidity, and therefore just be demanding on negotiating your entry price. Okay, just do that. Be patient. Yeah. So in my case, I'm just gonna try to push it. So I'm just gonna cancel, replace. Let's see if I can get 350 just so I get filled. If not, I'll try 355. Okay. So 350, it seems I'm not being filled. Okay, so I'm just gonna try 355 just because I need it. Okay. You guys don't do this. Be patient. And if you're gonna change prices, do it much later. Okay, I just got filled at 355. So I'm in. Okay, I am in. That's it. I got the trade at 355, so I'm just gonna customize 550, 195. That's what I got. So 550 and 195. Okay, so 550, 195. That's what I got. So that's my 355. I'm just gonna right click that one, copy position to the clipboard, and that I'm gonna bring it to top and place it there on my positions at the bottom, right there. That's my Yelp trade, and we are in. Okay, and we're gonna be learning about this one in the following sessions and following it and everything else. Okay, so I'm just gonna draw to conclude the day, I'm just gonna draw a vertical line there, another vertical line there, so that will show basically when we got in, and we will know that for future reference. So I'm gonna save my page, And that's it. It's all recorded now. We know what we're doing. Target up there with a red line, 42.75. Let's see what happens. Cool, my friends. As always, my true, real pleasure. I love the time in the week where we have the opportunity to get together on the Wednesdays, the Thursdays, as well, recently on the Sundays as well, to talk about top. Delighted to see you guys. Keep up the good work. Love those questions. Keep asking, keep practicing. Post on the question page. Let me know with an email when you post it, if you post it, so I can double check. All is good. Should be fine. And yeah, again, let's keep growing, my friends. And yeah, see you soon. See you on Sunday during the top session. Take care, everybody. Bye-bye.